Okay, guys, welcome. It is Thursday night, July 24th, in preparation for Friday, July 25th. In the markets, we are continuing, before we jump into the markets here, we are continuing with Tony Saliba, Market Wizard. Um, all right. Swagger asks him, says, what was your first really big trade? Tony says, Teledyne in 1984. The stock had dropped sharply, and I was building up a position in the out of the money October calls. Well, the stock started inching back up, but these guys from Pacific Coast Exchange were they also like I'm sorry, but these guys from Pacific Coast Exchange, the PCE, where they also listed Teledyne, were leaning on my longs. They just kept battering them on the close every night. Instead of shying away, I stepped up and I would buy them. You want to sell them at 1.25? I'm 1.25 bid for 50. This went on for over 10 trading days. Swagger says, were the Pacific Coast traders leaning on the calls? Tony says the stocks that had gone down from 160 to 138 and then inched its way back up to 150. I guess they didn't think it was going to go up anymore. On May 9th of 920, they stopped trading in Teledyne because of news pending. The news came across the tape. Teledyne announces a stock repurchase program at $200 a share. And then Schweiger says, so they were buying back their own stock? He said, yes, the stock was at 155 and I owned the 180 calls. Overnight, I made millions. The stock eventually went up to 300. The next 4 to 5 months were great. Schweiger says, what happened after that? He said, one of my goals in life was to become a millionaire before I was 30 and retire. Well, I was a millionaire before I was 25. I had decided to retire when I was 30. So on May 5th, 1985, my 30th birthday, I walked off the floor and said goodbye to everyone, and that was it. I was never going to come back to the trading floor. How far up were you up then? Asked Swagger. Oh, about 8 or 9 million. Did you know what you were going to do? Oh, no, sorry, I didn't have that question there. Swagger says, how long did your retirement last? He said, oh, it lasted for about 4 months. Were you bored? Asked Swagger. Yes, I missed the markets. I missed the excitement. So in the beginning, money was the goal, but once you got there, it became, and then Tony interrupts him and says, yes, it became secondary. Maybe if I had a wife and kids or someone special in my life, I might not have gone back. But trading was my life. It made me feel like something, and it gave me a reason for being. Um, Okay, this is another page or so later here. Swagger says, when did you change your mind? He said on Wednesday, the week before the crash, the market fell apart. Thursday, it did not bounce back, but it kind of churned. Now, if it had rallied on Friday, then I would have been confused. But instead, the market cracked on Friday, and at that point, I was sure we were going down. Swagger says, because it was the end of the week? He said, yes, there is a high correlation between the action on a Friday and a follow through on the next Monday, or at least on the opening. Did you have any inkling of the size of the impending move on the following Monday? Tony says, do you know what I really thought was going to happen on Monday? I thought the market would open lower, go down sharply, and then bounce back to about unchanged. I actually bought out of the money calls that Friday for protection. Swagger says, but you said you thought the market was going down. Tony says, yes, but I just wanted to have some insurance. A trader once told me, Saliba, in stealing second, you never take your hand off first until the other hand is on second. That's the way I am. I always have insurance. Went on to a bunch of stuff about options trading there. Swagger Aspen says, do you always know the maximum risk in a position that you hold? Do you always know what is your worst case? He said, yes. Now, what could happen? The market sits, it explodes, or something in between. But no matter what happens, I know what my worst case, my loss, is always limited. Swagger asked, why do so many traders who come to the floor end up losing everything? Tony says, I think the biggest problem with some traders that come to the floor is they think they are bigger than the markets. They don't fear the marketplace, and they lose sight of their discipline and hard work ethic. Those are the traders who get blown out. But most guys on the floor really work hard. Swagger says, what is the biggest misconception the public has about the marketplace? Well, the idea that the market has to go up for them to make money. You can make money in any kind of market if you use the right strategies. With futures, options, and underlying markets, there are enough tools available to set up the game plan for any situation. In other words, Swagger says, the public has too much of a bullish bias. Yes, it is the American way. The market has to go up. The government never said anything about program trading when we were in a 3-year bull market. Once the market started to go down, then all of a sudden, program trading became a major concern, and they set up commissions galore. For the average person like my mom and dad and their relatives, the biggest misconception is that they think that when the market goes up, you make money, and when it goes down, you lose money. People need to approach it from a more neutral standpoint and say, I'm going to be a little long in this category and a little short in this category, but limit my short side risk because it is infinite. How do you handle a losing period? Asked Swagger. How do you lose money? Question mark. It says Tony. It is either bad day trading or a losing position. If I had a bad position, that is the problem. Then you should just get out of it. Is that the way you do? Yes, I either liquidate it or neutralize it because then you are back afloat. When you are in the boat that springs a leak, you do not drill another hole to let the water out. Swagger says, what if your trading losses are due to you making bad decisions? What do you do then? He said, I take a day off. I get myself all wound up. I like to lay out in the sun and bake for a while and let all the strenuous stuff go out of my head. So again, market wizards take days off if they get too overcommitted on this stuff. But what are the elements of good trading? Asked Swagger. Tony says clear thinking, the ability to stay focused, and extreme discipline. Discipline is number one. Take a theory and stick with it. But you also have to be open-minded enough to switch tracks if you feel that your theory has been proven wrong. You have to be able to say, my method worked for this type of market, but we are not in that type of market anymore. What else? Asked Swagger. He said, always respect the marketplace. Never take anything for granted. Do your homework. Recap the day. Figure out what you did right and what you did wrong. So this is part of our daily homework, guys. Figure out what you did right and what you did wrong. That is only one part of the homework. The other part is projective. What do you want to happen? What do I want to happen tomorrow? What happens if the opposite happens? The opposite occurs. What happens if nothing happens? Think through all the what ifs. Anticipate and plan rather than just trying to react. So that's one thing that Linda has stressed about doing your homework. Mark Cook has stressed about doing your homework. A number of people here in the Market Wizards have stressed about doing your homework, not just coming in and like, oh, we're just going to fly by the seat of our pants. One part of the homework is recapping your day, recapping your trades. That's one big part of that component of this. The other part is doing the homework and the stuff we'll get into here in just a moment. Matter of fact, oh no, we're almost done with this. Hang with me here. I'll finish this chapter. When you made your first few million, did you sock some of it away to limit your worst case possibility? Tony says, no, my trading strategies were growing and I needed new capital. Then, after I made some more, I started putting money into other investments like real estate, stores, exchange seats, and things like that. Then, when the market crashed, I hate to use that term, on Monday, October 19th, I realized that I did not have a big chunk of cash anywhere. So I took a couple of $1 million out of the flow and bought T-bills. Then a few weeks later, I used the money to buy an annuity. Jack Swagger says, I guess because your trading style is so focused on limiting losses, the first time you felt a need for safety net was when the market seemed to be saying that a catastrophe could occur and have nothing to do with you. He said, yes. What happens if you have $10 million in your trading account, but they shut down the game? So that's something to keep in mind. If you have $10 million built up in your trading account, but then they shut down the game, where are you gonna be? What are you gonna do? And I know there were people around 9/11 that went through that when the Twin Towers crashed. Mark was telling me, people couldn't get access to their money, couldn't get access to things like that. And there have been other times through history where things happen, they bank issues, things like that. So always something good to keep in mind. How do you set goals? Asked Swagger. Tony says, until recently, I set goals on a monetary level. First, I wanted to become a millionaire before I was 30, and I did it before I was 25. Then I decided I want to make so much a year, and I did that. Originally, the goals were all numbers, but the numbers are not so important anymore. Now I want to do some things that are not only profitable, but will also be fun. For example, I'm currently working on setting up a trading company and a software company. I also want to do the family type thing. How do you judge success? Asked Swagger. I used to judge success as being the best in your field, like Bruce Springsteen in rock music. In my industry, it would have to be a dollar wise. Now I think it's more quality of life. A lot of people think that I'm a success, but I don't feel like I'm a success. I really don't. I feel like I've made a lot of money and I've been successful in this one area of my life. I I help the needy, but I don't have that family fulfillment. How do you judge success? I don't know. All I know is that all the money in the world is not the answer. Jack Swagger says, well, you thought it was at one time. Yes, I did. And to be honest, money is important because it is influential. See that guy standing over there? I don't know him from Adam, but say he came over to talk to us. If he made a really bad first impression on me, I might not have much respect for him. But if you told me, but if you then told me that the guy is worth $50 million and he made it on his own, that would completely change my opinion of him. That may not be fair, but that's the way it is. How does trading affect your personal life? Asked Jack Swagger. Tony says, I'm able to handle it well from a business standpoint, but from a social standpoint, it clobbers me. It does not allow me to give the time to women and friends that they require. People like to just sit and talk sometimes. Unless it's about business, like this with you, I'm out of here. Are you always that conscious of time? Asked Swagger. Yes, most people aren't. They say, well, don't you ever just sit home and watch TV? Swagger says, well, do you? Well, I might have a TV on, but in my head is always on trading. Last night I came back from a dinner date at midnight. I was tired and wanted to go to bed, but I was up until 2 a.m. figuring out trades. It is an addiction. I used to be much worse. I got lots of grief from former girlfriends because I would take my work home with me on dates. I don't do that anymore, but I'm always still thinking about trading. What makes you different? Asked Swagger. I think I can do anything, he says. I mean, he didn't say he thinks he can be president, Dustin, but Tony and we're on the same level here. He said, I think I can do anything, and I'm not afraid of hard work. Right now, for example, I'm working on a deal with a French bank to put together a trading company, blah, 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 blah. Okay, so this is Jack Swagger's summary here. It is important to realize that many of the great traders interviewed in this book were not immediately successful. Saliba's initial trading experience was so disastrous that it brought him to a near suicidal state of mind. However, what these traders share is a sense of self confidence and persistence. In the case of early failures, these traits are enough to lead to eventual success. Besides allowing him to make a comeback from his earlier poor start, Saliba's persistence also came into play at other points in his trading career. For example, many others faced with the type of constant ridicule that Saliba was subjected to in the Teledyne pit might have abandoned their strategy. This same Teledyne example also illustrates another important characteristic of a superior trader, the maintenance of rigid risk control, even in difficult circumstances. It must have been very tempting for Saliba to trade a larger position size in the Teledyne pit when he was being derided as Mr. One Lot. Instead, he maintained his discipline and continued to trade small size until his capital had grown sufficiently to allow him to increase his position size. And buddy, we were talking about that tonight. That's all good. Working hard and examining many different scenarios so that he is prepared for all contingencies is a critical element in Saliba's success. By anticipating all the what ifs, he can take advantage of the situations, such as the October 19th stock slide, instead of being immobilized by such events. For many people, the concept of great trader conjures up an image of someone using a shoot from the hip type approach, moving in and out of the markets with great agility and a near sixth sense. The reality is far less glamorous. In the majority of cases, Exceptional traders owe their success to hard work and preparation. In fact, similar to Tony Saliba's, many of the very successful traders will do their homework every night, not allowing leisure or other businesses from interfering with their daily regimen in market analysis. Um, when they stray from that discipline, it usually ends up costing them money. In Saliba's own words, referring to a recently missed trade due to his failure to having his orders in while on a business trip, it cost me 10 grand. And all those little 10 grands can add up. All right. That's it on the market widget there for tonight. Wanted to just show this. I thought this was fun. So this goes back to January of 1960. This is the S&P 500 index from January of 1960, and look where we are today. Oh wait, no, is that even today? Yes, 2025. So this is the markets here. I thought it was interesting. This dip here was back in. Oh, let me zoom in here. Sorry. No, no, no. So this dip here happened in 1987. Fast forward here. This dip here was in 2002. That was a 2002 crisis. This here was 2009. So 2008, 9, the mortgage collapse here in 2008 or 9. 8 and 9 right there. Move on up. We came out of that really strong. This little blurb on the map here was in 2020, the COVID burp, just boom, and then immediately back up. So now we've come up here. This little burp here was in 2022. So 2020, 2022 here. This one little tail down here, we just recently experienced that back in April of this year. That quick shoot down, and now we're back up. So I thought that would just be interesting to look at this on a monthly basis since back in 1960 up until where we are today. You can see on a monthly basis, we are starting to get a little bit of divergences. So interesting thing there to note. But all right, let's jump back into the futures here. 25. Oop, I don't want monthly. Let's turn that back to weekly. And let's go back to the daily. Okay. So here on the daily chart, I'll expand this up. We are still, still positive on this slow line on the daily. That still holds true there. We did have this little bit of push up here today. We're currently pushing up into the Globex session as we speak. But wanted to show here that, technically everything I see is that we could still be on a buy day, but the market is poised for a 2-period rate of change flip down, which it actually is doing on this push up. So interesting. So back here on the 21st, which was last, what was it, Thursday? No, 21st, this Monday, sorry. So back on Monday, we came out of that with a 1-day flip up, 2-day flip up. Today was a 3rd-day flip up. So that was Monday, Tuesday, Wednesday, Thursday. Today was Thursday. We just barely went up here. We are poised for a flip down in the 2-period rate of change if it were to happen. You see, we currently have a little bit of a divergence in the 2-period rate of change. So I want to be conscious of that. So even though tomorrow could still be strong going into Friday, and that could continue into Monday, a little bit of strength Monday morning, I want to be conscious of that. So like I said, I'm kind of seeing a potential buy day with cautionary notes that we are due for a flip down in that 2-period rate of change, which, like I said, currently it is flipped down, even though prices are going up. So let's just keep an eye. I know you guys don't watch the 2-period rate of change, but take that for what it is, and let's watch the intraday price action. Okay, let's look at the 65,000 tick chart. Let me pull that over. Okay, so on the 65,000 tick chart, we are seeing a little bit of that, divergences here. I marked off this horizontal line here to show when that slow line rolled over. The fast line, of course, rolled over. Matter of fact, fast line is negative right now. So let's also, when we come in the morning, let's keep an eye on this. Are we going to have a reversal type thing here? That same thing, I believe, also shows on the 60-minute chart. Let me pull up the 60-minute. Yeah. So here on the 60-minute chart, oh, come on, Cletus. So we did this, that big move up, flagged out of it, hit off that 20 period of moving average a couple times this morning, and then we made this move up. Well, you can kind of see we did a pretty good increase here on that big thrust up. Today, a little bit of chop here. So, like I said, we could have a little bit more continuation up here, but some of the things here are showing cautionary signs on the uh, internals. So we did have a slight move back up in the VIX here today. See that basically closed as a doji there. So even though we were pushing down, which should have had a pretty good market move up, we ended up closing back up here. Matter of fact, we closed slightly above yesterday's close. So we got a slight divergence there on that. Whereas the daily, I guess daily we closed about, I don't know, about even. What was yesterday's close? So we closed here at 64.0575 versus 64.0650. So interesting thing to note there. Remember, guys, it is a Friday environment. Let's play it as such. And safe trading, happy trading tomorrow, and we will follow up soon.